We hear from the contractors, though, that because of the cutbacks in capital spending by government, so there's a reduction in new projects coming forward, and we also hear about late payments and problems with cash flow because clients are delaying payments or governments are delaying payments. So contractors say that they've got a major cash flow crisis or crunch underway. Is that what you see from your...
Absolutely. And in banking terminology, we see a significant cash flow mismatch been coming in because projects need to be still delivered within the timelines that they used to be delivered in the past, probably a bit more aggressive given the pipeline of projects that are in there. But at the same time, the kind of payments, the flow, the easiness with which it's to flow into the banks in terms of the work being certified, etc., are not the most optimal. And therefore, it leads to opportunities where the contractor has to really figure out how to raise that, financing in the middle. Now,
before we come on to contractor options,
yeah.
What does that look like from a banker's perspective? When a contractor approaches you, or any corporate approaches you to borrow money to fund their projects, what are you looking at? What are the key things you have to sort of see when somebody approaches you for borrowing?
Okay, so let's step back a bit. This market actually offers you the ability to deal with contractors across the entire credit spectrum. So you have the local contractors who have come of age after having gained the track record and respect after having executed so many projects. And then you have the international contractors who have been in different markets, emerging markets, have come to another emerging market like the Gulf and have made make themselves count. And they are really taking the more complex projects on board. Having said that, when it comes down to the bank as to how they really differentiate, there are very clear boxes that we need to see being ticked before as a part of our screening process. So we are effectively looking at, to start with, the underlying paymaster out the sponsor risk. We are looking at the complexity of the underlying project and the track record of the contractor. So those are the basic screening.
So a contractor comes to you for financing for a specific project. One of the boxes you have to tick is the paymaster.
Absolutely.
So you're looking at whether they're government or private sector.
Right, and therefore that effectively gives you a sense whether the contractor, even if it has the ability to perform, will get paid on time or not.
And who should be bringing you the information about the paymaster? Is that the obligation is on the contractor to say, here is our client, here is the information, or do you go to the paymaster for that information?
In fact, we do very closely follow what's happening in the construction sector. There are bids being announced, and we therefore know which are the contractors who are bidding for that. So the major projects are already known to the people who are interested in the sectors, especially from a financing perspective, as these are the next 10 projects which are expected to be announced and awarded, etc., etc. So there's a very close monitoring that's already done. And the paymasters at the end of the day are, if at all we are restricting ourselves to the government, oil and gas, players, etc., we know there are a handful of them, and we do, know the underlying credit profile as to, their payment terms. Having said that, if we are to look at the next step, and these what I just mentioned to you are the very clearly the common stuff. But what is more important is to then get into the requirements around the how do you structure these facilities. Now, bonding lines are easy to assess. You have to pretty much template-ish 5%, 10%, percentage of the project. But when it comes down to raising funding lines, that's when you start taking a bit more deeper dive into the balance sheet, and that's where the international contractors obviously score a bit higher.
So the first thing you look at when somebody is asking for finance, you look at the paymaster for the project. The second thing is you look at the project itself, complexity, the technical challenge, deliverability. You also then look at the order book for a contractor. What's their pipeline?
That's a part of my more deep dive exercise,
Okay.
where if I am to look at, other than the fact that he has the, or rather the company has the credit, has the expertise to undertake that project, then we move to the next step, is to figure out if at all the financing requirement is around financing the project. What is the kind of balance sheet depth that they do have? So there you get into the stickiness of the revenues, their order book position, their in fact on a slightly on a negative sense, but if there has been any claims on their guarantees in the past, how have they honored that?
Okay. So you're looking at the assets and liabilities.
We are looking at the assets and liabilities.
Balance sheet.
And there we find the international contractors to a large extent having that extra edge.